on B because I was A.
You were just getting on?
It's a B. The same question you opened. I was doing B now.
Oh, okay.
Oh,
That's
yeah,
fine. So
fine.
this is one of the easiest chapters, but at the same time, that requires understanding, right?
Yes.
People view ratios as very easy because it's just formulas, and then they lose a lot of marks when it comes to comments,
I
right?
see.
So my objective today is just try to help you see how we make the comments, right? I actually prepared some notes here. Where did I save them? Okay, it's here. Okay, so we'll go through these notes just before we start, right? And then I will send them to you once we're done.
Okay.
All right. So I'm saying, okay, please allow me to begin by saying that in my view, there is a distance between what the learner learns from what a text, right? From a text, right? From a text and applying the concept in real life situations. What am I saying there, Lungile? I'm saying I think majority of the students, right, cutting all across, anybody who's a student, right, I feel like including myself, the challenge that I've been having in my studies is to apply what I'm learning in a practical, real life situations.
Yeah.
Right.
True.
And for me, it becomes very difficult, right, for me to truly understand something if I can't connect it to practical things. You know what I'm saying?
Yes.
Like, think of derivatives, right? Derivatives, what is it? You know, when you're talking of bonds, you know, you can understand the concept, but in real life, what are we talking about? You know? So I think there's that gap that, like, you know, it remains a concept, it remains an idea, it remains something that is just up there. You know what I'm saying?
Yes, very
And
true.
my intention is just to try and bring it close, my friend. You know what I'm saying?
Okay.
Okay. So we're saying, in other words, I believe one should be able to vision what they study in order for the lessons to make, or in order for the lessons to be better understood and memorized.
Okay.
With the above being said, we will try to simplify most of the concepts that might be difficult to understand, hoping it will create a positive impact. We will follow the approach of asking the basic questions of why, what, and where, especially the why part, my friend, right? You know,
Yes.
if you're doing something, you need to ask yourself all the time, why, right?
Yes.
What impact will this information have? Who will benefit from this information? Especially in management accounting, because we focus a lot in management accounting and financial accounting. We focus a lot, we prepare the information for someone else. So we need to ask ourselves, who are we preparing this information for?
Yeah.
How will they benefit? You know?
Yes.
Okay. So when it comes to analysis of financial information and non-financial information, this is actually very important, and you'll see why financial and non-financial as we go down, right? So we're saying, I actually like the word mentioned at the beginning of the topic, analysis. Why do I want to emphasize on that, my friend? As accountants, right, we have moved. If you check accountants in the real life situations, we have moved from just calculating numbers. Now, you know, we spend majority of the time doing analysis. There's a report that I was doing today, right? That report, right, what I was doing, I was just checking accruals, my friend, right? I was just checking accruals from the prior month to the current month, right? We are accruing for rent. So now, if there are any differences, I should report on those differences and explain why there are those differences. That's what we call analysis, Mganwa.
Okay.
You know what I'm saying? So as an accountant, my friend, you don't just see a number. A number must have a reason. A number must have a meaning, my friend. You know what I'm saying?
Yeah.
If you had 10 rand yesterday, today you've got a 5 rand. What happened to the 5 rand? Right?
Yes.
And remember one thing that is very important. Us as accountants, my friend, right? There's a theory of agents that is covered in SUS 1501. Agents, right? We are agencies in a company. So meaning everything that we are doing, my friend, right? It is something that should benefit the company because we are agencies. We are stewards. You know what I'm saying? We are there to look after the assets that do not belong to us. They belong to the company. Are you with me?
Yes.
Okay. So I'm saying because our work as professional accountants has moved from just calculating numbers to more of advisory and analysis. You know, majority of the people that I work with, they will just give me numbers, right? And then after they've given me numbers, they'll tell me that, okay, from the budget that I had last month, I'm seeing that there are variances of this thing. What happened? Tell me what happened. You know, so if you don't have strong analysis skills, you're not going to give a proper advice as an accountant. And my friend, let me tell you something beautiful. Ne? Over the weekend, I was writing one of my exams, you know, to qualify as a tax practitioner, right?
Okay.
So I did very well. I passed. So now I am a qualified tax practitioner. But what I want to share with you, ne, there are rules that you need to abide by when you're a tax practitioner, right?
Yes.
And if you give an incorrect advice to a taxpayer, SARS can deregister you. Do you understand? What is my point? As an accountant, my friend, if you give an incorrect advice negligently, you might find yourself being in problems because that means you are not competent. You get what I'm saying?
Yes.
So in other words, Lungile, all the numbers that you were calculating there, you now need to go back a bit and ask yourself the reasons why you were calculating those numbers, right? Who are you calculating them for? What is the impact or the value that you'll add, my friend? You get what I'm saying?
Yes, yes.
That's the type of an accountant that we need in this environment, in this current environment, my friend.
Okay.
Following?
Yeah. Yeah. Yes, I am.
I'm saying also, it is interesting to note that it is not only financial information that is being analyzed or evaluated. It is also the non-financial information. Firms should not only base their decision on financial information, especially in this era of digital economy, my friend. Non-financial information also plays an equal role in providing useful information to management, right? Okay. What am I saying with that, my friend? If you check most of the assets in this economy, in this current economy, the digital economy, my friend, they've moved from being tangible assets. Most of the companies, their balance sheets are increasing and increasing. They are increasing in what? In intangible assets, my friend.
Okay.
You've got something that is called trust. Trust is an asset, Lungile, right? Because remember, people are not going to buy from you if they don't trust you, if they don't trust your business, rather.
Okay.
Do you understand?
Yes.
So now, if we only concentrate on physical equipment, physical buildings, physical vehicles, what are we saying about goodwill and trust that is required by our customers, my friend? You understand?
I do.
Historically, the emphasis has been on the analysis of financial information. However, with the new reporting requirements, right, what are we talking about? We are talking about a concept that is called integrated reporting. Firms now include non-financial information. Integrated reporting is a process whereby firms not only report on financial information, but also include stories of how firms do their business, and how short, medium, and long-term value is created.
Okay.
Are you with me? So the
Yes.
focus is more on value. What is value? Value is not profit, right?
Okay.
Value goes beyond profit. Value goes beyond just selling a product to a customer, my friend. Are you with me?
Yes.
Right? When we're saying customer got value, it means, my friend, right? They got the product, the experience, and the service from that product, my friend. So it is the total benefit that the customer gets from just buying a product, Mganwa.
Okay.
Are you with me?
Yes.
So meaning, when you went to buy a product at ShopRite, it does exactly what you thought it does, right? And you get a full 100% satisfaction from that particular product, my friend. And also, the process of you leaving your using your internet until the product is brought to your place and until you consume it, that whole process is seamless. That's what we call value, Mganwa.
Okay.
Excuse me. Do you understand? So value
I
is
do.
just not only you getting igwinya and just eating it, my friend.
Yes.
So when someone comes and buy and sell igwinya to you, we need to check how was it created, right? Particular product, my friend.
Okay.
Are you with me?
I
Let's
am.
continue. It is interesting to note that in this current economy, there are assets that are not captured in the ordinary annual financial statements that companies prepare. For an example, like trust, which will be incorporated through integrated reporting. Integrated reporting is recommended for all companies. Are you with me?
I am.
It is not sufficient to calculate ratios and comment with increase or decrease of the ratio. The learner or the student should analyze the causes of the variance and how, or the learner should analyze the cause of the variance, right? And or how to remedy the situation.
Okay.
Right? So meaning when you're looking at the variance, you should be able to trace the cause of the, because a ratio only gives you the symptom. What is the symptom? The profit decreased from the prior year, right?
Yes.
But what caused that decrease? And how can we fix that, my friend? That's the purpose of doing the ratios.
All right.
The interpretation of the ratios is also equally important. Are you with me?
I am.
All right. So let's talk about the goals or the objectives and users of financial and non-financial analysis, right?
Okay.
What am I saying? I'm saying from this subsection, we need to understand how closely related is the analysis and interpretation of information, right, to the users of annual financial statements, my friend. Right? So meaning, that's why I keep on emphasizing that you need to ask yourself, who is going to benefit from this ratio that I'm calculating? What information do they want from this ratio that I'm calculating? How will it add value? Because remember, they will be making decisions based on the information that you have provided them.
Yes.
And an analysis provides users of information, financial and non-financial, with meaningful information, and assist the users to interpret the information provided and make informed decisions. The aim of the process of analyzing and interpreting financial and non-financial information is to establish trends, variances for a firm over a period, usually 1 year. By comparing the results and the trends revealed by the analysis with those of competitors and the benchmarking against the industry currently resolved it, right?
Okay.
The analysis may also provide a basis to consider opportunities and strengths. and threats.
Okay.
And look how I worded that thing. I'm saying the analysis may also provide a basis to consider for opportunities and threats. And then I highlighted that part. I'm like, why? Right?
Okay.
Because remember, the financial information that we are doing an analysis of, it's all internally generated, meaning the results that we'll get from that analysis will help us to identify weaknesses and strengths because these are internal.
Okay.
Right? But when we benchmark that information with the industry, when we benchmark that information with the competitors, we can be able to also identify opportunities and threats, which is an outside environment, my friend.
Okay.
Does it make sense, Lungile?
Yes.
Are you following?
I am.
The objective of analyzing the annual financial statements and non-financial information is to determine the firm's performance. When you are talking about performance, you're talking about a profit and loss, future prospects, your balance sheet, and financial structure. The objectives are closely related to the needs of the users, right?
Okay.
And then the users of financial information. You've got investors, right?
Yes.
So when you calculate ratios, what is it that the investors are interested in? Are you following?
Yes, I am.
We are saying shareholders are only paid after the debt providers, your employees, your creditors, all of them when they've been paid, right?
Okay.
What does this mean? It means the shareholders will be interested in the risk involved in retaining their investment in the company as opposed to liquidating that particular investment, my friend.
Okay.
Therefore, the firm's current profitability, expected earnings, and the capital value will be of interest to the shareholders. Are you with me?
Okay. I am.
A ratio such as a return on invested capital will be a ratio that an investor will be interested in.
Okay.
Right? And when we're talking about investors, we're talking about current investors and potential investors. Right?
Okay.
The potential investors will also be interested on the risk, profitability, and growth.
Yes.
What does it mean? It means financial and investor ratios will be of interest to them, my friend.
Okay.
Then you've got financiers, which is your debt providers. Debt providers are interested in ratios, analyzing whether loans will be paid in full and also on time. The debt providers will use the ratios to perform an assessment of the firm's finance risk, right? Which affects interest charged and the loan covenants that will be imposed. So if the company is not financially viable, right, it means then the debt providers will charge a higher interest in order for them to recoup their the loans that they would have provided to the company, my friend.
Okay.
Are you following?
I am.
Then you've got creditors. Creditors, these are trade creditors, will be concerned about the short-term liquidity. These are the people that we buy stock from, right?
Yes.
And liquidity ratios, right? Especially the working capital and the cash flow projections. You've got employees. Employees will be concerned about the job security as this will impact their future, right?
Okay.
And also under employees, you've got trade unions, right? Trade unions will be interested on how much their members are being paid. They will be interested to see the top management salary and how the members are being paid. They will be also interested in non-financial information that will include the number of shareholders that are being appointed in the company. The management will include your board of directors, your partners, your sole proprietor if it's a company owned by one person, management accountants and managers of various departments, right? So these guys will be interested in identifying the symptoms, right?
Okay.
They will be identifying the symptoms so that they can remedy those particular symptoms, right? The symptoms will have to be investigated to discover the causes, right? As an example, I gave you there that like you might find that, okay, there's an issue when it comes to debtors days, right? You see that the debtors days are increasing, meaning people are taking time to pay us. That is a symptom. What is the cause? The cause is an ineffective credit control policy. That's what the management will be interested in. Are you with me?
Okay, I am.
You've got auditors. Auditors, remember what is their role? It is to express an opinion, whether financial statements are fairly presented, right?
Yes.
So an analysis, and actually this is very interesting, my friend, especially I actually found this interesting because I did a CYPA, right? So as a CYPA member, you become an auditor, right? But an auditor who only focuses on companies based on the interest score, right? So you don't provide an opinion. What do? You do what I listed here, AMA reviews,
Yes.
right? So some companies will only require a compilation or a review, my friend. And as a CYPA, a professional accountant, you are allowed to do that based on the standards, right?
Right.
So what are we saying? We are saying an understanding of proper analysis, right, and interpretation of ratios will be very key for such an audit, right?
Okay.
Because if you have to do an independent review, which will offer a limited assurance, my friend, what do? Right? You will be doing an analysis, my friend. Do you understand me?
Yes.
Okay. So there will be other interested parties. This will include your pressure groups, especially recently when it comes to environmental groups. Do you understand?
Okay.
So those will be your users of financial statements, right? Then here at the bottom, there are techniques, my friend, whereby you've got comparative financial statements. What does it mean? It's a comparison of financial statements over a period of 5 to 10 years. You've got indexed financial statements, which involve setting 1 year as a base year, and then everything else will be calculated as a percentage of that base year. You've got the common size statements, right? Whereby we redraft the financial statements, right? And anything else is expressed as a percentage of total assets. And in your statement of profit or loss, everything will be expressed as a percentage of revenue.
Okay.
Right? And then you've got financial analysis, which is your ratios, right? And your ratios are very, very, very important. That's why I was saying people always think that ratios are very easy. But truly speaking, they can get the marks correct, but they lose marks when it comes to adding comments. You know what I'm saying? And then here at the bottom, I included all the ratios that might be important to you, my friend. Are we together?
Okay.
Does it make sense?
It does.
All right, so let's quickly go through this. With this foundation, my friend, I'm assuming ratios, you will be working your way up in understanding ratios better.
I see. It's going to improve understanding as well.
Okay, so let's go through this question quickly. They said, and then we'll be highlighting the important information. They said Edcars Limited, right? So quickly you can see that, okay, this is a public company, right? Remember, a company can be a public company, right? But it might not be listed. So if ever it's saying a limited, we know that majority of the times it can be listed, but that does not mean all the public companies are listed, my friend. You know what I'm saying?
Okay.
So in other words, all the companies that have to register in JSC, they have to be public companies. But it does not mean all the public companies are listed in JSC.
And how do I know if not listed?
They will tell you, like in this case, they say it is listed in JSC. And I've seen that majority of your papers, most of the time, they are,
Yeah.
they will be listed in the JSE.
Okay.
The company is a leading retailer of clothing, home appliances, stationery, cosmetics, accessories, and cellular products in Southern Africa with more than 3,000 retail stores, the majority of which are in South Africa. Edcars caters for different LSM groups. You know, like our source said, the LSM, my friend, it's a technique. Actually, you can Google it. It was very interesting.
Okay.
It's a technique that uses affordability.
Oh, okay.
Right? It uses affordability with your people who are getting less money being at the bottom, with your medium people, and with the people that are earning more being at the top.
Right.
Are you with me? Okay.
Yeah.
And also has become one of South Africa's most trusted brands. Remember, we spoke about trust being an asset, right?
Yes.
The company's main rivals are clothing retailers with less exposure in home appliances and cellular products retail market than Edcars, right? So these are competitors.
Okay.
Right? Home appliances and related cellular products tend to have quite higher margins than the clothing segment, and these items are generally sold on credit due to their higher value. Okay, so you can see that home appliances and cellular products have higher margins.
Yes.
Okay. And then they're saying Edcars managed to increase its sales in the current year by almost a double-digit figure, despite strict lending guidelines by NCR. Can you still hear me, my friend?
Yes, I can.
Okay, I want to make a point here that increasing sales, that does not mean it's profit.
Okay.
And if you check at the bottom, you'll see that 16 point something billion of their sales, they were on credit. So you cannot conclude by just reading that this company is profitable.
Oh, okay.
Do you understand?
I do.
Because in those sales, right, you are increasing also, right, the possibility of your credit losses.
Yes.
Excuse me. You understand?
Yes.
So that's one thing that you need to be aware of. I know that it's easy to see that and be like, wow, this company is really making money, but it might not be the case.
Okay.
You know? Okay. So this increase is partly as a result of more robust marketing, right? More robust marketing the company embarked on during the financial year. 15 new stores opened in November 2015 and have performed above expectations. Management of Edcars has invested a significant amount of capital in getting these stores fully functioning. The prime lending rate during the current financial year was 11.25 per annum. And there are 365 days in a year. The target capital structure is 40-60. The statement of comprehensive income and statement of financial position of Edcars Group Limited are provided below. You've got your revenue, cost of merchandise, gross profit, other operating income, other income, trading expenses, net finance cost, profit before tax, taxation, profit for the year, interim and final dividends, retained income for the year. Weighted average number of shares, number of outlets, staff complement, right? Share prices. Okay, your financial position, you've got non-current assets, PPE, other investments, goodwill, inventory, trade and other receivables, prepayments, cash and cash equivalents, stated capital, other reserves, retained income. Long-term portion of interest debt, deferred tax, post-retirement medical benefits. Short-term portion of interest-bearing debt, trade and other payables, operating lease liability. And then on the notes, they said of the 23.7 billion sales made during the year, 16.6 billion were on credit. Do you see what we're talking about?
Yes.
Over the years, Edcars has maintained a healthy relationships with its suppliers, resulting in discounts received and flexible terms of payment. Purchases for the year amounted to 12.1 billion, right? 90% was secured on credit. Okay, and then the company also maintains a gross profit percentage of 32%. Right, on clothing brands vis-a-vis excluding homeware and cellular products. Other income relates to dividends received from investments, right? Trading expenses comprise of trading expenses, depreciation and amortization, employee cost, occupancy. I think I once explained this that other year, or I don't remember if I was talking to you, but occupancy just means rent, né?
Okay.
Net bad debts, other operating costs. Finance costs for the year amounted to 1.2 billion. And interest income received on credit bank balance was 200 million. You know, my friend, this is possible. To receive 200 million as interest.
Really?
The client that I'm working on now, my friend, like you find that they've got multiple investments, né? And some of their interests for a month they go up to 100 million USD.
Is it?
Okay. So this is not a far-fetched thing. This is what's happening in real life situations, my friend.
Okay.
Interest-bearing debt at 30 September was 11 billion. The corporate tax rate is 28%. Required, calculate the following profitability ratios. Okay. For the year ended 30 September 2016 and provide possible explanation for any changes in these ratios. So you're not only calculating ratios, you're providing also an explanation. Yes. Right, from 2015, your 2015 ratios were provided. So for today, we will focus just on these ones, on these top ones. Can you see that for your calculations, it's 16 marks, right? And then for your comments, it's 8 marks. So meaning 1, 2, 3, 4, 5, 6, 7, 8. So meaning it's 1 mark per comment. So you don't have to stress yourself with a lot of comments. You can give 1 or 2 comments there.
Okay.
Are you with me?
I am.
All right. So we'll take a break for 10 minutes so that I can also rest my voice a bit, and then we'll continue. Just gonna focus on part A now.
Okay.
All right, we'll talk again just now. Are you okay? Do you understand? Are you following?
Yes, I think it's going to be easy with the notes you've created. So yeah, I'll be fine.
All right, my friends. So we'll talk just now.